Hey guys and girls, welcome to this week's Facebook Live. Just waiting for a few of you guys to hop online and let us know that you're here and you've got no technical difficulties, and we'll get straight into tonight's discussions. Feels like there's not that many people on straight away today, I don't know. We've got everyone's starting to come on board.
A few people trickling in.
You can just send us a little message that you can hear us and see us well and all that sort of stuff. Beautiful. We've got James there saying hi. Hope everyone's having an awesome week and kicking ass with their goals. So tonight's episode, we're going to be talking about regional versus metro areas and where should you invest and where's a better sort of area and all that sort of stuff. You asked me a question about houses versus units, so maybe we can cover a couple of those things today. So that's going to be the bulk of tonight's discussion. But I've got some articles here, as always. So I'm going to get straight into tonight's discussion. And I'll start off with a chart. Right? Let's just start with a little chart. Right? I love charts. Right? Everyone loves when I throw the charts and throw them around, right? But this one here is going to be cool, right? So how much will the next crisis cost? And here we are looking at the chart. I'll leave it up on the screen. The chart here is talking about, you can see in the grey, the lower point where the search sort of the magnifying glass is. That is the 2008 GFC with the stimulus package that were put in. So the US went from billions of dollars. It went from $6 trillion, about $6 trillion, up to about $9 trillion. So it was literally $1 trillion got us through the GFC. That's that grey bit just over here. And then we come back to February, March, April, May 2020, and we can see that we went up from a debt level of, where were we? We're at $16 trillion all the way up to $19 trillion. That was just printed overnight. You can zoom right in. See, that's pretty much straight up, right?
Is that all? Just
$16 trillion? No, that's a few trillion, right? So over a decade, there was more money printed over a decade than what there had been for 200 years prior, right? And then in the last, in the alleged illness situation, it went up and shot up all that basically again. And what would the next stimulus packages look like? And obviously we're seeing lots of cool things, come out at the moment. They've talked about increasing, so the US debt is now $31.6 trillion and going up quite rapidly. Mm-hmm. And they've just asked, because they've run out of debt, they don't have any more loans or capital, they've asked to increase it to like $50 trillion, right? Mm-hmm. That'll get them to for another 10 years. But on the same trajectory of where they're going, the interest bill is now over $1 trillion a year, right? So that's where the debt is starting to get fun. So we see stuff like that, and that is facts. They're facts of the debt that's sloshing around out there in the system. I'm going to go and read through my articles, which my team have prepared for me, and then I've got another article right at the end just to put it into a little bit of perspective. So this article here just came out today on news.com. Brutal warning for Aussie homeowners as the RBA flags possibility of more interest rate paying. Right? And everyone's out there going, what's happening with the interest rate? I still have people out there saying, Birchie, you said that they won't put interest rates up, right? And I never once said that they won't put interest rates up. I said that they can't put interest rates up by more than 0.5%. Very big difference in words, right? And I said if they did put the interest rates up, then we'd see, the countries go collapse, would see banks go collapse, would see corporations, and the actual words I used were zombie companies, which are all just the toxic waste businesses out there. And we're seeing that on a weekly basis. So this article here goes on to say, more pain for mortgage holders could be on their way after the Reserve Bank of Australia indicated the possibility of a further interest rate rises. The RBA on Tuesday released minutes of its April meeting, where it left the official cash rate, which guides the interest rate set by lenders, on hold after 10 consecutive increases. The minute it showed the central bank mulled over whether hitting the pause button or a 25 basis point rate rise to 3.85% was appropriate. In the end, homeowners were spared another increase. Oh, you were giving such a spare, right? Well, you can read these articles, right? But it's may as well just see how big did Kim Kardashian's butt get this month, right? It's just gossip and chatter and all that sort of stuff. I should have a chart here, which I actually fear didn't get printed. Didn't get printed. I printed it. Definitely printed it. I go on to the ASX cash rate futures, which is that chart that I always show everyone. It is showing a negative tail. So can you speak to Carolyn tomorrow? And I did that video with Gemma that day, talking about what would happen. Yep. Can you chat to the marketing team and get them to throw it up on the internet?
Sure.
And
I think that was back in December.
It was December, yeah. It was something like that, December, November.
Yeah.
And Gemma had asked me, Nathan, how do you know? And she was like, she always asks these million questions that she does, and wanted to know more and was curious about it. And I did a little video just saying, hey, this is what's going to happen. I talked about that it was heading like this, and you could tell that the interest rate would just go up, 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 up. And I said that at a point it will come down, it will snap, and it will go with a negative tail, and that negative tail will sort of catch a wave all the way through. And that's what it's showing. So I don't understand why they're talking about this when it doesn't reflect in their data and their factual sort of numbers. And let's just run a scenario, as I keep saying every week or every fortnight when I pop on here, is what would happen if we were to see interest rates go up again, right? We've got businesses going bust, we've got governments going bust, and I'm going to show you some I was going to play a video, but I've been recording this from my phone, so I can't really do it. So, but I'm going to show everyone an article that's really, really funny. It's probably the funniest thing that I've seen come out of the media recently, which just solidifies everything that we've been talking about for the last 5 years going on about this stuff. But here's an article that just came out. It says millions to be slugged with shock increase that doesn't pass the pub test. Millions of Aussies with student loans have been warned to brace themselves for a supersized increase in their debt in the coming months. More than 3 million Australians with student loans have been warned to brace themselves for a supersized increase in their debt in the coming months. The debt known as HEX help is not charged interest. Instead, the full amount is indexed to inflation each year and is often labelled a good debt that is far cheaper than typical types of debt. Over the last decade, the average indexation rate was just shy of 2%, but as inflation skyrocketed, the indexation rate has too. Last year it hit a decade high of 3.9%. This year it's forecast to be even higher and could reach 7%. The actual figure won't be known until April 26 when the ABS reveals the March quarter of inflation figures. For Jessica Curry, who borrowed north of $45,000 to complete her undergraduate and postgraduate studies, means a third of her compulsory repayment will be eaten up by indexation. So just go on to look at this, right? How stupid is it, right? I'm not saying people go to uni stupid. You got a uni degree, you just paid it out.
I did, I just paid it out.
Yeah. You did that.
No, I did, now that I read that article.
It's they will give you debt that you don't even know what you're signing up for or whatever. You haven't got a job, you haven't got income, haven't got anything. You can barely make a decision for yourself when you're a teenager, going in your 20s or whatever. But yet they're happy to sign you up for, all this debt that's stuck with you. You can't even go bankrupt and remove that debt. That debt is stuck with you for the rest of your life until you pay it out. So just terrible for people that do that. Here's another article here. Jim Chalmers drops a big hint on the upcoming budget after the Washington DC trip. The Treasurer has offered a major hint about what Australians should expect in next month's budget. Warned of incredibly weak economic growth over the next 5 years as he finalised his second budget. He said that the May budget would have 3 key priorities: cost of living relief, growing the economy, and ensuring Australia is more resilient to international shocks. So let's just look at that, like cost of living relief, right? So how do they relieve people from cost of living? What they do is they do certain things, right? One is put up the interest rates. But all that has happened is the cost that the businesses have, the cost that the homeowner has, just gets passed on.
That's passed on.
Creates more inflation,
yeah.
Right? And then what are they relieving, right? So when they're relieving, they're using that word, right? They all, anyway, they can all go relieve each other. Looking at, the relief that they're giving, they're just going to be printing more money and adding to that debt, right? Just adding to more and more of that debt. So it's going to be very fun. I didn't have an article that got printed out. So there was two things I was missing this week. One was the article that was talking about, was the chart that was talking about. The second one was an article, just wanted to pull any article, talking about what is actually happening with China. I talked about it last time. I went on to talk a little bit way off topic about, I was stuck in front of the camera myself, Pat, and when I do that, I go, no one's here to rein me back in. China, Russia, watch all the stats fall down after I say these words, right? It's pretty bad. But, and they're saying that China's doing this and these wars, the increased potential of chances of wars to occur. But what has happened is China has gone out and traded in this yuan, right? So anything that's attached to the US dollar or traded in the US dollar. So how the world financial system works at the moment is if in 1971, August 15th, 1971, President Nixon and, Henry Kissinger went out and did a deal to the Saudis and said, hey, Saudis, we'll offer you protection if you trade oil in US dollars. So everyone that needs to buy oil, which is everyone around the world, would trade oil, but they need to buy US dollars first, right? So that's when the US became from a producer to a consumer, right? And when they went from a producer to a consumer, it meant that the only thing that they produced, they used to produce TVs, cars, and all that stuff. They outsourced that to China and all these other third world countries. And I'll say it, very lightly, the countries that aren't the US, right? They're superior, right? So they became a consumer. So they just keep buying off these other countries, right? Which were, growing places, which were nothing going back 50 years ago. And we go fast forward 50 years, what has happened is that China and other nations have become the producer and not the consumer, right? So they've grown a lot in power and they've done certain things that have been, really well and very strong for them. And now they're at a point where they're trying to decouple the US dollar. So instead of people being able to trade in the US dollar, the last time that people didn't trade in the US dollar, it was Gaddafi, Saddam Hussein, all these guys, and they made them out to be war criminals and all these sorts of things, right? Which is quite funny and ironic. But they couldn't do it with China because you've got too much human capital. It's like 1.5 billion people compared to 300 million and all their allies and shit. So that is a big, interesting time, right? Because if the US loses its dollar, then US would turn completely into hyperinflation tomorrow because no one would want it, right? How the US prints all their $31 trillion worth of debt, another $50 trillion, to get to $50 trillion, is that they sell the bonds to all these other countries because they have a belief in their currency, right? So if they lose the ability to trade, which they have because China's out there doing deals with like Mexico and all these different countries around the world, well then they need to put out propaganda and try and, attack the minds of people used to have guns to shoot everyone in the war, right? And they've got a video screen and they're, shooting people with the mines and, they've got the NBC suits instead of the military suits. So, looking at it, like what would happen if the US dollar collapsed, right? Our Aussie dollar is based off. You don't see, the Aussie dollar is, one Chinese yuan, right? They call it, it's worth 1.4 US dollar, right? Yeah. So if that was to occur, hyperinflation would occur to the US immediately and then just spell on like a contagion, right? The only way out is to print more money, which is amazing. Interesting, at least, right? So just on that note, right, let's go to my second last article, and I'm going to share with everyone the funniest bit of news I've seen all week, right? So this one here isn't funny for anyone that has a super fund, which everybody has a super fund, but, if you have it in a super fund, which is not a self-managed super fund, you're doing yourself a disservice, right? And I always say this, people say to me, and this is no financial advice, so if any commies from the government are watching, go away, right? We're not giving financial advice, but it's just funny. We're going through stats and data to provide you from all these propaganda outlets, right? So as here goes, super funds are set for a rare back-to-back negative annual returns, right? So if someone had 200 grand in their super or 100 grand in their super, let's just go through it. You would have thought, right, okay, let's just go on. There's lots of things here. Right? Super savers are probably in for another lackluster financial year with the median performing balanced investment option returning 0.6% since the start of the financial year to March 31, largely due to the struggling share markets in the face of rising interest rates. They're fucking up the share market, right? With less than 3 months until the end of the financial year, the typical balanced investment option, where most of these still working have their retirement savings, will probably finish the financial year near where it started. Right?
Not good.
No, that would be hot on the tail of a negative return for just over 3% for the last financial year. Super ratings figures show it's very rare for there to be 2 back-to-back negative financial years. Well, if we saw 2 negative quarters, it would be called a recession. If it was 4 negative quarters, it would be called a depression. But here we have 2 years of negative super funds, right? The only time that this has happened since the introduction of compulsory super is in the early 1990s. Oh, what happened in the 1990s? We had a fucking recession, everybody, right? And it was between 2007 and 2009. The global financial recession, the largest recession since the global depression in 1930s, right? And during the financial crisis. If the current financial year produces a negative return, it will turn the only 6 negative financial years since the introduction of compulsory super. Fuck me, right? No one's talking about this, right? This is everybody's retirement, their super. If you think that you're going to retire on your super fund on 200 grand, you've got a lot of things fucking against you here, right? And then we'll go into a little bit further, right? It goes and say some other wank stuff in here, promoting whoever's written the article. Anyway, if it made just 1% this year, right? If we made 1% return, right? You had $100,000 at the start of the year and you didn't end up at $99,000. You ended up at 101. You go, like, wow, I've gone up $1,000 this year, right? Most people look at it and don't realize that they've dropped in, like, over the course of the year, money into it, and they could still be at the same sort of amount.
Yeah.
If they just had 1% extra, right? That means that you take your money, if you took your money out last year and inflation was just 7%, you'd be 6% worse off because you haven't looked at the cost of the hidden tax out there, and that's where everybody's screwed, right? But anyway, we go back a couple of further steps and think, okay, how far have you been robbed? Is inflation really even 6% or 8%? Doesn't matter what you look at the shops. Tell me what is cheaper than last year, right? Property hasn't even fallen down, right? You've got shares, which is dismal, right? I do not have any paper assets at the moment. And you've got cryptos, which are up and down, up and down. I got asked beforehand, do I still have cryptos? I still have some, but I traded that out for physical assets before, the markets turned to shit. I remember I got upset because I sold off some Bitcoin at $80,000 and went down to 20,000. Oh, there we go. Cool. Not so bad now, right? But, what hasn't gone up in the last year, right? Even after 10 interest rate hikes, 11 interest rate hikes, we have seen property prices rising in many different locations, which kind of gets us on to some of our conversations today about regional versus metro and all that sort of stuff. But if your super fund hasn't even caught up with inflation, you're going backwards in your life, right? And you're going to be eating fucking dog food when you retire, right? So I think if you look at certain things out there you could have put into, as everything collapsed, like why is these yields going negative, right? You've got all these financial planners and financial gurus and experts. We've all seen Wolf of Wall Street. The only difference is that they're not snorting a line of cocaine off a hooker, right? In your super fund. Pat's very he gets very conservative by these things. He doesn't like, I'm waiting for Pat to go one day. No! But, Wolf of Wall Street, dodgy shit, right? We've got all these commies that don't know what they're doing, right? They can't even keep a bank alive, right? They can't even keep the financial system alive, and they can't even keep the country alive because we're going to go into something that's going bankrupt right at the moment. And we'll change a few names. We'll play a little guessing game here, actually.
But the same applies, I feel, as well with With people just keeping savings in the bank.
Keeping their savings in the bank, paying off their mortgage,
It's the same concept, right?
They do not understand what is happening with their money. They don't understand how money is created. They don't understand how it works. They don't understand debt is money. The only way it comes to existence because they created and printed off on a balance sheet of the central bank somewhere, which is causing all these problems. But no one ever talks about the news. You never see the news articles, we've robbed everyone because we've done this. But if you've got your money in a super fund, right, you should be really sitting there thinking, well, I looked at gold, right? I always look at gold. It's like, some people have Tinder on their phone. I have the gold charts, the different things that go in there. That's gone up since like a few months ago, 2,400 an ounce, Aussie, to like 3,000 an ounce, right? That's gone up 20% this year. 20%, right? It is fucking nothing, right? It's just a little rock, right? That has gone up 20%. But a financial planner, they don't have any incentive to sell that shit, so they don't suggest that for your fund. If they do, they put it into some sort of paper asset, which is some sort of ETF or some other junk that never existed anyway.
A share in gold.
Not even a share. It's like a Ponzi scheme. It's like a lotto for gold, right? When you look at ETFs, they're just like paper contracts, right? The price shouldn't be that. The price shouldn't be $30 an ounce for silver. It should be much higher. But the reason why is because it's suppressed with all these contracts trying to short the market and keep things in check. So it's all manipulation games in the financial market. So, you might have your money in a super fund, but you should be thinking, okay, what else? Like, everybody should be their own financial advisor, right? You shouldn't be trusting some guy. Like, what's financial planners, right? They're normally middle-aged guys in a suit, tie, tell you all this jargon that you don't even understand. They're working for the last 40 years. They haven't got a retirement plan on their own. Otherwise, they would be self-funded and self-retired already. They wouldn't be doing their, financial planning to you. And they're just there to sell you products. And I'm just going to stop my rant there. But, right, they tell you to get ahead. Everyone should be doing their own research and understanding and all that sort of stuff. So be very concerned. Like when you start to see articles like that, which is worse than the global financial crisis in 2007, 8 and 9, like you should be really thinking. And we haven't heard anyone say we're in a recession yet. They're saying we could potentially go into a recession. But we haven't heard anyone say we're in a fucking depression, which we are. And no one's even identified that apart from Birch here. It's been saying that they would go into depression years ago. Very, very funny. Very, very funny. Now, I said at the start, before all this sort of stuff happened, that we would see the global financial depression come in 2017. I said it would expect to be 2018, 2019, and this really started taking off in 2019 when we saw the collapse of the repo market with the banks. It's called the repo market, but it's nothing to do with repossession. It's called the repurchasing agreements. At the end of the day, the banks settle. They have some money that each other owes. Each other's called repurchasing agreements. They have short-term lending with each other, and some bank went bust, and they started doing all these back-end loans, triggered off just before, the alleged thing happened a couple of years ago, and everyone's life was changed. But I said that we'd see, the GFC would see companies go bankrupt, would see, bad actors go bankrupt. But this time would be much deeper. The banks would go bust, which we're seeing. Countries would go bust, their currencies would go bust, and all these different things. And we're starting to see currencies collapse, which is another topic for another day. But this is the funniest thing that I have seen on the internet recently. This is an article from Sky News, and I posted it in Birch Feed. So if you haven't read it yet, go to Birch Feed and check it out. If you're not on Birch Feed, go and register. It costs you nothing. Don't be a cheap ass. You just have to enter a few details. Yes, we get your data. We're not going to call you like a pest, a sex pest or anything. We'll add you in there. You might get a contact every now and then, like once a year or something from us, but tell us to go away if you don't want to talk to us. But that's all it is. Just any details. We need details to get you in there so you're a part of it. But this article here, Victorian government's in talks to secure a bailout in the upcoming federal budget, right? That is the topic.
So they're budgeting for a bailout.
No, they're fucked, right? They're bankrupt, right? Victorian government in talks to secure a bailout in the upcoming federal budget. So now we've got some Labor guy down in Melbourne, and you've got a Labor guy in Canberra, and the Labor guy in Canberra is now saying, he's going, hey, can you give us a bailout, right? We're both Labors, like, help us out, we're fucked, right? So Victorian Premier Dan Andrews, something's printed over the top here, has requested a bailout in the upcoming federal budget. After the world's longest illness lockdowns, you can put whatever road you're on in there. I've still never said it ever, right? Never even slipped it out because I can't say it, because I can't confess it over myself, because I just don't buy into this stuff. Victoria's state debt has climbed to a record. Everybody's sitting down, right? Pat's sitting down, I'm sitting down, everybody better be sitting down, right? Let's just go back a few steps. In 1992, they said that Paul Keating screwed the government, screwed the economy, and it was all his fault, right? I have different views on it. I was fucking 7 years old, 6 years old at the time, but different views. When I go back through data, I'm like, hang on a second, that guy may actually said something that was right. An honest politician, go figure, right? But every country around the world went through a recession in 1992, right? Funny enough. The country took a decade to get the only surplus budget, which was in the Howard government. It took over a decade to fix it up, right? That's over the whole country, selling off all the assets, selling off everything, putting us in the GST, whatever. $92 billion or $96 billion, right? The Victorian state debt has climbed to a record $115 billion and is expected to grow by more than $165 billion by 2025.
Wow.
Is anyone not seeing a fucking problem with that? That's just one state. That's just one state. I'd love to see what New South Wales is, what Queensland is, what Western Australia is. Western Australia probably not, because they've got fucking commodities and real value in the ground, but that's a different topic, right? And it goes on to say, right, if you guys think that you're in a government job, you're going to be safe, whatever, business is going broke, everyone's going broke. Not that it's a scary thing. I'm excited because I know there's only one thing that they can do, and it's what they've done all these other times, is they just print more money, right? But when we go back to those charts, and the chart that we had at the start, and I said that would show this, right? They printed this, right? At the GFC, they printed all this money, and it created the biggest boom we'd ever seen, right? The illness had come, and they printed fucking massive. They printed more than ever existed, right? 10 years ago, never existed. They printed that all overnight, right? Bang, bang, bang. Just printed this money. And we saw the biggest boom we've ever seen. Apparently it's China's fault. Apparently it's Russia's fault. Apparently it's the illness fault. Apparently it's the chip shortage fault. Apparently it's the potato chips not available, right? Could be anything's problem, right? But they've printed this to get through it. And the only thing they can do is just print their way through this shit, right? So I'm excited because I understand cash is trash, right? I don't have any cash. I never have any money, right? I've got assets. I've got real wealth, right? The debt, I always said the debt would become the asset. The debt is the asset because the debt gets eroded with inflation. There's going to print more money, which is debt, someone else's debt. And then that will circle through the economy. Inflation will happen and you can pay out that worthless debt that you have because the debt becomes irrelevant with inflation, right? So it says Mr. Andrews has already confirmed the public sector can expect cuts of around 10%. Sorry, Melbourne, you're going broke, right? But this isn't just Melbourne. Ain't, crying poor. It's everywhere. Everyone's got so much debt. And the more, let's just think about it this way, right? And break it down, right? Because these are facts. They're not bullshit. Oh, interest rates could go up next month. Who trusts this fucking Philip Lowe bloke, right? Philip Lowe said we wouldn't see an interest rate increase until 2024. He increased it by 3,500% in 1 year. Interest rates went up by 3,500. It was 10 basis points now. It's 360 basis points, right? So who trusts these fuckers, right? But what is fact is that we've got the premier of whatever his name is, the invalid vegetable down in Melbourne anyway. Some people might love him, but I don't know, I'm not politically correct. Who cares about politics? They're all commies. He's got $115 billion worth of debt, right? Let's just say, let's just call it $100 of debt, right? Let's just round it off. It's not $115 billion, it's just $100, right? You used to have to pay on your $100 worth of debt 10 basis points, so 10% of 1%. So you got $100 worth of debt. You have to pay 10 cents, right? It's nothing. You can afford it, right? The lower it is, the better it is, right? But now you have $100 worth of debt. You have to pay 3.6% or $3.60. That means that you've got to go from $100 to $103.60. That's just this year. And then the year after, and the year after, and the year after. And if you structure your loan as a fixed term investment, which would be a bond, which is how they have to do it, it means you might have to do that loan over the next 5 years, 10 years, whatever, right? So that means that these governments, because they push up the rates, they're all going to go bankrupt. It's mathematically impossible. I'll challenge anyone on it, right? It's mathematically impossible. So the only thing that they can do, and the longer that this goes on, the higher that they've pushed it, the better it is. I'm the fucking happiest that I'll ever be. Because the more they do it, the more they're going to have to come back and make that go like a hockey stick next time, right? The more that they do this, the more that they're going to have to stimulate the economy. And what does it mean? It means everything's going to rise. And there's going to be people that are going to be wiped out. Savers are going to be losers. People that are paying out debt are going to be losers. People with paper assets are going to be losers because they're going to get manipulated like they're doing at the moment. People with debt that's fixed with an asset, not taking out debt to go and buy, I don't know, the missus a holiday or, whatever cosmetic surgery they want or whatever, right? Not stuff that you're not going to see return on tomorrow. Stuff that you're going to have as a physical asset, whether it be a phone, whether it be the glass, anything that's not perishable, anything that provides the cash flow gets inflated, the asset gets inflated.
The debt does not.
The debt is retired as what you picked it up for. And they're going to have to do this and wipe out this debt. So I keep saying it, I've said it. One of my mates said to me the other day, he goes, wow, it's finally clicked in after 7 years about the hyperinflation of when you said you'll pay off your mortgage with a Big Mac, right? The penny clicks. So the more that I say it, the more that people start learning and start asking questions and start seeing the signs of it all being, I could sit here and just be at home, we could just be having a chat, we could just be talking about property stuff. But I think that you need to have a good relationship with money, and well, it's not even money, it's currency, but let's call it money for the fun of it. You need to have a good relationship with that, a good relationship with debt to be able to understand the game board that you're playing on. Because if you don't understand the game board, how do you know how to take advantage, how to play Monopoly? So I've got a big Monopoly wall here. People can't see, but a massive Monopoly wall here on our wall. So it's a B.Invested Monopoly. So yeah, that is the news. That is my little rant of the week. We're going to get into
quite a rant it was too, Nathan.
Was it fun?
It was a good one.
It was a good one. Metro versus regional areas. But before we get to that, hey Pat.
Hey, how you going? Hey everyone.
This is Patrick. If you don't know who Pat is, Pat, what do you do here?
I'm part of the investor relations team.
Yep.
And so we're helping the onboarding of clients and guiding them to the right place, whether it's broker or solicitor or accountant or yourself. And so just helping people through the process of buying and refinancing and going well.
You're like the gatekeeper, mate. You're the one that guides everyone.
The concierge.
Some people,
I don't know.
Yeah, you're like the concierge, but you. I remember what movie was it? It was like it was American Gangster. Right? It was American Gangster. I don't know if everyone has seen American Gangster. It's a cool movie. It's Denzel Washington.
Denzel, yeah.
Yeah. And he was the driver, right? Mm-hmm. He was the driver, right? And he saw the deals go down, right? Mm. He was the kingpin of the area, wherever they were, right? And then the big drug lord or whatever died, right? And then this driver picked up all the pieces because he knew how to be the G, right? Mm. And you have single-handedly seen a part of all these portfolios, right? Like when you came on board to work with this, like, what was it, like three years ago? You're interested, you'd come in for a map session like 10 years prior. You'd done your research, bought your family home, all that stuff. But then you're like, hang on a second, you came in for a job and one of the first things was like, oh, it's funny, I've been following you for years and all this stuff. But then when you started seeing it in real time, you've got people, I know you've got hundreds of people that have done amazing things. I don't know, just equally there would be thousands of people that you've spoken to that could have done tremendous things, but they did fuck all because of their opinion, their thoughts, the negativity, all that. Yeah. And you've seen what makes a good investment, what makes a good portfolio. You're an investor yourself. You've got a portfolio. Tell everyone about your story in a minute about your property that you told me the other day that a real estate agent told you you could sell it for more, right? But you're seeing all this happen every day, and you've got so much. You can go to one of these losers that writes all the stats in the articles here, and they're like, oh, property prices could do this and based on this, right? you're seeing real-time data that's happening, whether it's deals falling over. You asked me before we hopped online, one of your clients lost 2 properties today because the market's fucking hot and there's people paying more, right? You're seeing this data, it's real, right? So that's what you do. Like you have all this knowledge that you've picked up just by helping out all our investors. So it's cool.
Yeah, it is been kind of picked up, I guess, just via osmosis.
Yeah.
Right? You see the deals come in, you see it all play out.
Yeah.
You see sometimes the deal falls over, unfortunately, but you learn something through that, you know?
Yeah.
You learn, hey, we need to catch that finance hiccup earlier, or, you know, get ahead of the building pest report, or whatever it might be. But yeah, the main thing, like you said, like there are so many people that could have done and should have done, but didn't.
Yeah.
And we're talking back, well, when I started in 2020,
a
lot of people had lots of reasons to not invest in property.
Yeah.
And
more reasons than probably ever beforehand.
Probably.
My business has been closed, I'm locked in my house, right? All these things.
All the things. But there was also a great percentage that did.
Because they were educated. They searched, they had knowledge, they had confidence based on all that data and all the noise that's out there, and they went, cool, yeah, I can see through that.
But I think something that like, you know, is one of the fundamentals of B.Invested, right? Is the whole under market value concept.
Yeah.
So I think that like no seller in their right mind would want to sell something at under market value, right? They want to get their decent dollar as well, right? Or maybe they might be a desperate seller, but they still want to get some kind of fair value for it.
Yeah.
Whereas I suppose we're able to identify like, hey, even though the agent is asking 200,000 and we might secure it at 200,000.
Yeah.
That's still 50 grand under market value from all the other data and research that we're working with.
We have a young lady who, how many would she be? I spoke to the other day, you know, the one, she's got a nice portfolio, maybe 20 something. She's been with us for maybe
I think she's got like 20, 24, 25 keys.
25, yeah.
But maybe like 18 properties in total.
Yeah.
Anyway.
So let's say 25 sets of tenants in what she's bought.
Yeah.
Young lady, like she's not born with a silver spoon or anything like that. Built a really cool portfolio. I love the fact when we present her something or how she looks at it, right? Like over the last week, the reason why I'm saying this is that she sent us emails on about like 10 of her properties, right? And she sent them to us every month or so, right?
Yeah.
And it's like, she is so invested in her own journey, right? She's like looking at it. Like when we send all the deals, like we might send the property to 2 people before we send it to the next person. And it's like, those people have said no, right? And this person goes, hang on a second, yeah, cool. I can see the value in it, the cash flow, the equity, all this, blah, 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 blah. I'll do the deal. But she actually comes back to us and sends us like screenshots and snippets of, hey guys, you know, this one here just sold on the block for 230. I just bought it for 180, whatever the case may be. That's really cool because you're seeing it like, I do that research myself, but it's like, hey, like this person's so invested in their own well-being. They're taking that proactive to look at it and having the conversations going, hey, how much is that one selling for? Great. Pulling that data. And that data we can see is like bang on. And that's, you know, you can be proactive, you can be scared, you can be whatever, but if you're not doing the action, you're not going to get the result. And,
Yeah. Look, I suppose it's like anything. You gotta, if you're fixated on a result and you want a certain outcome, you got to do everything that's going to be congruent to get there. And going to the gym. Hot topic right now for you and me, right?
Exactly.
But some people just aren't prepared to do it. Some people just aren't, and that's okay. Like there's other things that pop up in life for sure. But like there are people that can do it, and then do it rather. And then they look back in 3, 4 or 5 years and people say, wow,
you're lucky.
How'd you do it? Well, I just took action and I just prepared myself and I went for it.
Yeah, think of those cliche sayings, right? There's one. It's all about luck. Just ask any loser.
Yeah, right.
It is, right? It's
exactly.
Yeah.
Exactly.
People just sit there,
they rely on unstable things to get them to the next step. So
cheap thrills, whatever. Yeah. So Pat, you told everyone what you do. you're an investor. You've started your portfolio since you've been here.
Yep.
You bought a property. How long ago was it? Like the one you told me about the other day?
Would have been like June, July.
Not even a year.
Yeah, not even a year.
Fuck. What did you pay for it?
$460.
$460. Where is it?
Brisbane.
Brisbane, like where in Brisbane?
Brizzy, like
CBD.
CBD. It's like right
Right in the
right
like
next to Gabba.
4,000, right? Yeah.
Right next to Gabba.
So Brisbane CBD. You bought a property. You've had an agent contact you. How much did they offer you? Not on the market per se.
It's not on the market, but they said we're confident we can get 800 plus.
We just read about super funds. All these poor bastards with their super funds just gone backwards, right? This year, right? You just bought a property that has doubled in 9 months.
Yeah.
Right? CBD. You bought some other cheaper ones, right?
I bought two at once.
Last year.
So one was the Brizzy one,
Yeah.
and another was a cheapie for 120 to kind of complement them because that
regional
was a good little cash flow.
Yeah.
Semi-regional. I wouldn't say it's like out in the absolute sticks, but it's
like
kind of
100,000 people or something in the location.
Yeah, it's still okay. And then over in Perth as well. That was in January.
Yeah. How much you pay for that?
165
165
for a 3-bedder.
3-bedders in Perth. Rent?
340.
340. That's too low.
It is too low.
390.
I know, but they're in there. They're in there for 3 months now since the up.
Don't worry. Blink will be there.
I hear rumours.
I've employed the new licensee for Western Australia. I've got the office, which is all fitted out over in Western Australia in Perth.
Nice.
Once again, it's in Perth CBD. It's like got the zeros on it. It's like literally Perth CBD is the address. So we are in Perth probably in the next 4 weeks, and we can get everyone's rent sorted for them.
Cool.
But that's pretty cool. Like 160k, 165 rent for 340. That's more like a 10% yield anyway.
Yep.
So
And the Brisbane one, that went up by $100 as well.
yeah.
And the other, the 121, that's just incrementally going up by like $20-$30 here and there.
Yeah.
But that's okay. That's still rent for $360 a week on 120. So I can't complain.
If you tell people, like, you tell people this every day and talk about your stuff with everyone, like, no one says, oh, Pat, you're a liar, you can't do that. But imagine someone watching this, they're going out, I don't know, pub on Friday night, they're like, oh, just bought a property this week, it cost me 120k. Let's bash him, he's lying, right? We wouldn't believe that stuff.
Yeah.
And it's 2023, you're still doing it.
Mm-hmm. Mm-hmm.
So that takes us well onto our discussion today of regional versus metro.
Yep.
A lot of people have the thought that you can have one, but you can't have, obviously if it's regional, it can't be metro unless you buy something in a large regional area. But they think, oh, well, you buy in a regional area, it's not going to have the growth. It'll have the cash flow, but it won't have the growth. And you can't have all these things. But if we look at our portfolios, your portfolio, my portfolio, our investors' portfolio, like, you have one of your regional properties in Western Australia. Did you buy that one? The one up
Not up the top.
No, okay. So we had some properties when Pat first came on board working here. Like people were paying like 50 grand for those things, right? Properties that were selling for 600 grand went down to 600 grand down to 50 grand, and then we bought them. They're renting for $200 a week. They're negative cash flow $100 a week, but people were so close-minded and simple-minded going, oh, but this negative cash flow. It's like, well, they used to rent for $1,600. There's a reason why it fell down, and that's being fixed right now because commodities are rising and all this stuff. Just take out that property. They're now selling for 200, 250.
Yep.
Right? So you hold it for 3 years.
Hold on. Not even 3 years. I had two investors in particular. And they bought in, I'm pretty sure they bought in the same building. But anyway, they bought for like $69,000 and $72,000, pretty much like within weeks of each other. And so one's renting for $600.
Yeah.
This is, and he's aggressive with his rental increases, so that's cool.
$600. Someone getting $750 in there too, but
and the other one's sitting at $500 somewhere. But the lease is in place, so he's stuck with it for now.
Yeah.
But you can't buy them now for that. It's like now the
$250.
Now the party's happening, like the nightclub's going on, they're knocking on the door trying to get in.
You sell them. That's what you sell it. You go, here's all the losers coming. They bought it. We bought it for 50, bought it for 70, bought it for 100 grand. We'll sell them for 300. Take your $1,000 a week. Take your $800 a week rent. See you later. Right? That's a triple of it. The asset has gone up triple in a year. It's doubled in a year. Like, people think you can't have this growth, but it is. They're not bullshit numbers. I see people write on our comments, oh, this is fake. Oh, these people should be reported because they're putting out lies. You can't buy a property for that. It's like, well, you can, right? Yeah. It's happening, and people do it.
But that goes back to like my point as well from before. Like, sometimes it's not obvious. And sometimes it's really not obvious to someone who's not like dedicating themselves to get educated about the property.
Another one. A blind man might see what a sighted man may not.
There you go.
People think they know it all, but they, you know.
But like, sometimes it's from the buyer as well, like from you guys out there who are looking to build a portfolio. Sometimes it's not always obvious that it's a cracker deal. It may not be a great deal until 12 months down the road.
You know? You see it now.
But you see it. You see it unfold.
You see it.
Oh yeah, of course.
Because you've seen them all.
Oh, I've seen them all, and I was frothing when I couldn't buy anything, and then when I could, I was like, right, let's go.
I've been like that for the last 14 years in this business, Pat.
Yeah.
It's like, we should have bought them all.
Yeah.
Can't.
Yeah, can't do it all.
And so what do you think, like, if I was an investor, I come to you, Pat, and say, hey, I want to buy my first property. I want to buy 10 properties in the next 2 years, 3 years, 5 years, whatever, right? A year. Should I buy them all in a regional area? What do you reckon?
No.
Why?
You need a balanced portfolio. You need to diversify. You need to have different qualities, different characters in your portfolio. You know, each property I like to think of each property does have a different character, right? It's serving a different purpose.
But your Brisbane one, so that might be negative $50, $100, right? Yeah. But your other one is positive. I could buy 4 properties in Perth for 150 apiece that you bought, and they rent for 350 each.
Yeah.
Right? Why don't I just buy 4 of them? Why don't I have 20 of them instead of getting 10 of the other properties? Why?
Well, the other thing is as well, you got to look at like likelihood for equity, likelihood for capital growth, of course. So we're looking at different things like the infrastructure and employment opportunities, immigration, all that kind of stuff going in. Tax reasons maybe as well, like that could be a portion of it too. Yeah. But I wouldn't want to pack the portfolio full of $500,000 Brisbane units.
Yeah,
absolutely not.
Liquidity, risk. You never. People used to say to me like, "Oh, Nathan, I bought this property in the Gold Coast last year. You bought it for me for 180, and now it's only worth 210. I'm thinking of selling it." It's like, let the property do its thing. Those things now worth 600. People sold those properties. Some people sold them and only made 50K, and it's like
heartbreaking.
Yeah, I'm catching up with some investors, and they're like, "No, I sold it, Nathan. I sold it." I'm like, "Fuck," right? Yeah. But it's like it's having the bigger picture. And I couldn't tell you if Western Sydney was going to go up more than Gold Coast or Brisbane, but I knew that if you had 5 of each one, and you got 20 in your portfolio, then these things, this one might be more equity, this one might be more growth. Yeah.
The other thing that I like about the balancing of the metro versus regional, and why I see value in both is that, like you said, like it can kind of help balance the cash flow sheet for you. Yeah. In terms of like the yields in the regionals are typically higher, but again, that comes from research, that comes from data. We're not just like throwing a dart at the map and hoping for the best. Like we're looking in places where there's again employment and infrastructure and projects and all that stuff. But like the other thing is if you're buying for like 100 grand or sub 100 grand, it's not going to get much cheaper. Yeah, for sure. So we can look at the data from 5 or 10 years ago and see that it was selling at 300 grand with the right ingredients. And if we can identify those ingredients are going to happen again, then there's a likelihood of it going back there. So the other thing is like once it gets back to that 300 level, 400 level, you know what? You could sell that. And you could pay down your debt. Or like you said to me, you could sell it and go buy a block of units or something like that.
Exactly. That's what people are doing.
Yeah, so it's whatever, is the best move for the portfolio, of course. But some people's goal is to have 5 properties unencumbered. Yeah. Okay, cool. let's go. But like, you're not going to save. How much debt would, how much value would that be? 5 properties, let's say.
$1 million.
$1 million is $2 million. So you're not going to save $2 million. Let's be real. And then go put it all into property.
Yeah.
So you got to position yourself bit by bit, step by step, buy the right properties in the right sequence, so that when you get to that 5-year time, you can flush out your debt if that's your goal, and good as gold.
Our investor that we'll talk about before with like the 24 properties, right? She would have said there's like 10 of them. I'm sure she has. That have gone up like 50K.
Yeah.
Right? Let's just say that all of the properties went up 50K in the last year. Right? That's $1 million. Right? Someone's getting up tomorrow morning, 6 o'clock in the morning, getting the kids ready to school, sending them off to childcare for someone else to raise the kid. And then they go to work, they hop on a train at 7 o'clock in the morning, get to the city in their desk, sit there, work the time, get home at 7 o'clock at night, and they go, okay, cool, I've earned 60K this year, right? And 60 grand a year over 10 years, that's 600 grand. That's like 15 years of someone's life, right? Working and selling the time that this person's been able to do, right? If you had 5 properties, right, they just went up by 50K. That's 250K. That's like 4 years, 5 years of someone's working labour. That's without expenses either, right? That's without expenses. You work for 5 years, you have to pay tax, food, clothing, housing, all that sort of stuff. If you can save anymore, it's important to.
Yeah. So anyway, so that's
cool.
That's what I see from day to day with this. I don't want anything regional.
Yeah.
But they
don't go up in value. That's probably the biggest one.
They don't go up in value. It's too risky. Yeah. All of the things. But it's fine because I get it. I get where they're coming from, and like, no offense to anybody, but I think they're coming from a mindset and the horror stories that you may have heard on A Current Affair where someone bought a house for 700 grand and now it's worth 150 grand. And what a tragedy. Yeah. That sucks for that guy. But that's not the case. That's not what we're doing. If we're buying it at the 120 or 150 mark, we're getting it for, pennies on the dollar.
Yeah.
So that's the concept. It's investing. It's not like lucky dip.
Exactly. And having a good sound strategy there, that's to guide you along the way that you're, So, cool. And, what about houses versus units? I've got to throw that in there.
Yeah.
People think that only houses go up or, units don't go up.
But what about the land component, Nath?
What about the land? You've got to fix the driveway. You've got to put new gutters on your house. You've got to do all these things that are extra. What about land tax, right? Land tax, that'll kill people, right? That's crazy. And
But I heard that units don't go up in value.
So the question I ask, right, let's just use this as a real example, right? A real life example, right? Let's just go Southport, Gold Coast, right? Cheap shit unit. I could have bought a unit for cheap shit unit, 180, 200 grand. Let's say 200 grand unit. Cheapest unit now is like 450K, right? But you could have bought a house for 500 grand, which is now worth 900 grand, right? So yes, the house has gone up 400 grand, but if you put 900 over 500, it's only gone up like 80%, right? If you look at 450 over 200, that's gone up 150%, right? But the other part of it is that you have got, for the same 200 or same 500, you've got 2.5 properties instead of 1. Just because the house doesn't have strata to it, right? You've still got building insurance to cover. You've got other expenses that are associated with the property. But then when you look at what you could buy, so for the same 500 grand, you could buy 1 house or you could buy 2.5 units, right? So instead of having a rent of say $300 a week on the unit, you'd have $380 for the house. The house now becomes negative because the rental figure is too low. But because you could have bought 2.5 units, you would have had 300, 600 plus another 150, the extra half of one. Then you got $750 for the same 500,000 invested instead of $380. And when the rents go up, the house might go to 600 and the units have gone to 500. You've now got $1,250 per week coming in instead of $600 coming in, right? And it's the having more hooks in the ocean to catch more equity, more cash flow and all that. And people are looking at very two-dimensional. If I said to someone, this is the way that I remember us as many, many years ago, I've forgotten about it until now. If the market was to double tomorrow, would you want to have $1 million of houses or $2 million worth of units? Who gives a fuck, right? It's like saying, I've got 100 grand and it's in, you can have 50 grand, but it's in $100 notes, or you have 100 grand, which is 5 cent pieces, right? I'll probably take the 5 cent pieces because they're worth a lot more than the piece of plastic, right? But most people look at 5 cent pieces and go, no, I'm not going to take them, right? It's still 100 grand. So you need to look at the result and how the numbers do actually stack up. And when people say to me, let's say we go back, right, and someone goes to buy a house in Southport today at 900,000, and they go, well, houses go up in value, units don't. Well, I'd ask the person, well, how much is the unit worth? And they go, well, it's worth 500,000, right? Okay, cool. So it's only worth 500,000. What was the house worth 5 years ago? Oh, the house is a very good performer because it went from 500,000 to 900,000. Okay, so you're telling me 5 years ago the house was worth 500, but the unit hasn't gone up, so it's only worth 500,000, right? No. So what was it worth, right? And you can go pull any area, you can go pull any location, you can go and look at your own neighbourhood and sort of run those numbers and be like, oh, hang on a second, those things do go up. And it's all about having the numbers. And if you run your investment portfolio like a business, those numbers will all stack up, and numbers tell the truth. Your emotions tell you the lies. All those bullshit stories. I've got a podcast. I've got someone coming in to office, a special guest coming to office that runs her own podcast, and he wants to do a podcast this week. And if I was to start over again, what would I do? And I'll keep it for that episode. We'll put it out on our socials. It's from his podcast. But what I would do would have been very, very different, right? And I'm going to leave it for the podcast, but I'm going to spoil things. I'll put it all in there, right? So keep an eye out and all that. But the podcast would be like because I thought about it, I was like, hang on a second. I'm actually looking at my portfolio at the moment, and a lot of the large land holdings aren't fucking good. Right? They're good. They've gone up millions of dollars, right? But I'm like, hang on a second. If I had have just not steered over there, things could have been a lot different as well. And I've got a really amazing portfolio, so I wouldn't change things. But yeah, it's idiotic to have those opinions, right? Opinions are worthless, right? Facts are where the values are. So.
I think as well, probably point being is either or only isn't the best option. If there's a good house, it could be a good deal.
Yeah.
Awesome.
Yeah.
But you can't count out the units or the townhouses or even blocks of land to a certain degree. In terms of, and just give them a blanket rule of saying, nah, they're not a good investment. It's just
stupid.
It's just dumb. So
someone asked, Alex said, how do you listen to the podcast? So some people just watch us on Facebook Live, but we've got Facebook, we've got YouTube, we've got Instagram outlets. We've got the No BS with Birchie podcast. I don't know if there's going to be a No BS with Birchie podcast. I might be able to get the guy to do a reverse and do a podcast with us as well. I'll speak to him tomorrow. After this, I'll send him a text. But on all our socials, so follow the socials. 100% it will be on the YouTube channel. But there's the podcast. We actually have, I realized recently, we have podcasts that go out every Thursday. So they're on Google Play, Apple Play, Spotify. It's called the No BS with Birchie podcast. And, I started bringing guests in and stuff like that. People on there didn't realize of how big our organization is and all the people and all the cool things. So I started getting the team onto the podcast because those guys haven't heard from you guys and all that. So make sure you follow, because there is different content that goes out and different things. So yeah, this is the first time we've ever talked about all this stuff I think. So,
yeah, it's good.
Cool. So, how to manage out-of-pocket expenses. When do out-of-pocket expenses come too much? And, rising property costs. Like a lot of people out there, I guess, in the market today, worried about interest rates, worried about their expenses, and they're not really good investment people have got, right? And I think we've got a very basic strategy, very simple strategy. It's not sexy, right? Half the stuff we buy, like half your portfolio, you've got the nice one in Brisbane, but all the others, you'd be like, yeah, they're cool numbers. We appreciate. But if you looked at it, you took to the average punter, if you look at it and go, that's a piece of shit, right?
Yeah, pretty much.
Right? But the one that's in Brisbane isn't the best cash flow one, right? You've got the other ones that are giving you the nice positive cash flow all around it. I'm sort of answering the question there, I guess. So do you have any input on that?
So how to manage out-of-pocket property costs? Well, I think, again, if what always helps me is like if we go back to a time where if we take time back and say, oh, gee, I wish I invested 10 years ago. What was the interest rate 10 years ago?
Oh, it was like 7% out there. In 2008, I fixed my interest rate. This is why when people ask me, like, Birchie, how come how come you're so obsessed with the interest rates? People ask me, like, they actually say, oh, you think interest rates are going to do this? I'm like, I fucking know they're going to do this, right? Because I started working out how interest rates work because I fixed my interest rates at nearly 9%, right? The stupid person at the bank, right? It was the one with the dragon, right? It was the one, I think, little fucking coin box when I'm a kid at school and they give you the happy dragon. Told me to fix my interest rates because the interest rate could go to 20%, right? The next month, the interest rates dropped, right? The GSC came, they dropped and dropped and dropped. And, it's important to look at it holistically and, understand how the numbers stack up. So, I forget what I was going.
I think, well, like just with, like looking back in time, like a lot of people would say, oh, I wish I did it, or I wish I met Birchie earlier, or I wish this, or I wish that.
You probably didn't wish you met me earlier because I may have not gelled or something may not have worked or you may not have been right, I may not have been right. People meet at a certain time because it's the right time too. And, it'd be great to have the DeLorean with all your knowledge that you have today. But if you didn't, what would be different now, right? Like,
but rents were less back then, right?
Mate, I'll tell you, my first property, right, is in Western Sydney, a suburb called Hebersham. I had this great tenant in there, right? Great tenant. And I used to go and work in the property every weekend because I was building a granny flat and all these sort of things, right? The property was shit. It had all these problems constantly, right? I made good money out of it. And it gave me the deposit to buy my first principal place of residence. I made a couple of $100,000. I doubled my money, sold it off, and the rest is history. I sold it many years later just for the purpose of selling it, so I was not emotionally attached to that property. But at that time when I bought it, I paid $265,000. I got a $17,000 reduction. Whatever it was, I got it for $248. Was the figure I paid. And interest rates were like, I don't know, probably 6% at the time, and they went all the way up to like 9%. And at the time, I was looking at properties and I was thinking, okay, this thing rents out for $200 per week, right? Or $210. I was like, well, that's the least negative cash flow that I could find, right? My portfolio, when I first started,
least negative cash flow you could find at that time.
Yeah, because there wasn't no internet, there was no Facebook Live, there was no YouTube, there was no education. I went to a property expo and you had all these slimy fuckers, and I could see straight through them as an 18-year-old kid. But I could see all these fuckers that have got their suits on and they're like, oh, we'll fly to Queensland and get out of here, please, right? But I remember this guy, I forget his name, he had a property and it was like in Baltimore, it was a big house, it was just sitting vacant and he's like pretty wealthy. And I heard about it, he was working in like a food place. He's like probably 50 now or something, right? This guy, he's not those fakers that come out now saying they work at Macca's, right? But he worked at like a food shop or something. And he had about he was a developer. He's a developer now. He's a Lebanese developer. And he said to me something about, oh mate, I'm buying these areas because I said I bought a property in Mount Druitt. And he goes, I bought it in these things. They're in Brisbane. They're in a suburb called Logan. They're like $60,000, right? And I was like, oh, okay. I had this girlfriend at the time, and it was like 18, and you go to holidays, you go to the Gold Coast, go to SeaWorld and stuff. Went there. Poor girl. I'm fucking driving through the houseo areas and the ghettos and stuff. There was no internet. There was no realestate.com. You didn't know. You had to physically go to the areas, right?
Yeah.
I went there and all these, I was like so excited. I was like 50 grand here, 60 grand here, whatever. And then I came home and then had all these fucking people telling me things like, oh, it doesn't go up in Queensland, right?
Yeah.
Units, who buy a unit? They're shit, right? All these things. You can't fix a tap washer. So I didn't buy properties because I couldn't fix a tap washer. Units don't go up in value and Queensland's too risky, right? I didn't buy them. Those things went, Sydney market went down. Something that would have sold for 300 grand in Sydney sold in 2007 before the GFC for like 200 grand. Dropped like 20% easy. Everyone had mortgage repossessions on their doors. And then these things in Queensland, in Brisbane, went from 50 grand to 200 grand, right? The rents went from $100 a week to $220 a week, right? Then they crashed again. And that's when I started piling in there, right? I bought these things for like 100 grand, 150K, whatever. They're now selling for like 300 grand. The rent for $400 a week. Fucking great investment. Right?
Yeah.
Reality is, I don't go change my tap washer. Units do go up in value. Queensland's not bad. Only idiots lost their money. Because back in the 90s, the reason why I say people have all these opinions is that back in the 1990s, you'd have all these dodgy salespeople that would fly you up there. They'd meet you at the airport, take you in their BMW, show you it. They'd sell you 3 blocks of land, do the house land packaging. You're paying 50% more for the property. It's not worth it 10 years later. That was what I was fearful of. So, yeah, looking at it, we have so much information now at our fingertips, and I could sit here and say, I wish I did this, I wish I did that. Well, there's literally areas we can go to. You talk about going back in the DeLorean and back to the future, right? We can go to areas. We're picking up shit today that is 30%, 40% cheaper than what it was, right? Areas that we buy in quite often. I remember I was sending out these emails, and sometimes I change what I put in like some parts of the emails and when I present a deal. And people were like, Nathan, you said interest rates are 4% or 5% now, and they used to be 8%, and clients are getting a bit scared of like you saying it's worth 50 grand less or 100 grand less. I'm like, nothing you can buy today in 2023 is 30% cheaper than what it was 10 years ago, right?
Yeah.
If you can buy a property today that is 30% cheaper, that has a rental figure that's 100% more than what it was, so it's double what it was 10 years ago. Interest rates were 8% and now they're down to 5% or whatever. That's what we're paying today. It's like putting petrol in the car. I don't even look at my interest rates because I look at my cash flow. I'm looking at the income coming through and flying through my account. And that is value. That is shit that's cool. So you can technically go back and buy stuff that you could have bought 10 years ago and making those rights now. Right?
Yeah.
And people aren't looking at it. They're just like, I've seen the guy on the news. It's like, well, you can keep playing that game or you can keep start doing something different. And just my view.
Yeah, for sure. So it says here, address what are some concerns property investors might have with rising property costs and what they can do about it.
Yeah.
So I think as well, like if we're talking maybe like renovation, of a property, it's probably goes without saying, but it's so important not to overdo it, not to overcapitalize. Like you could go and make something so beautiful and so shiny and so cool.
Yeah.
But is it going to get you the same like ratio increase of rent?
Exactly. You want to make sure you get a return on it, right?
Yeah. You want to do what's necessary, not overdo it. And that's often all that's needed.
Yeah, I see people, they go and do all this work. I want to make sure, I've got a sort of rule of thumb, is that I want to get like a 50% return on investment, right? Mm-hmm. So if I'm spending 10 grand on a reno, I want to get 5 grand a year, right? There's no investment out there, right? Like, you got Bitcoin, you got crypto and stuff like that. But if I'm spending 10 grand and I'm getting $100 a week, that's 5 grand a year, I'm literally taking, I don't care about a credit card, I don't care about interest, because I can put my money into something else that's going to give me a greater return, because I have assets and shit that I can add value to, right? Could just be a bathroom, could be whatever. And follow up on that, like, I personally oversee the rents for our investors, right, at Blink and throughout our property management firm. So I want to have a real estate agent. When we're buying our properties, what percentage of properties would be under-rented by, say, 30 or 40%?
At least 50%.
50% of properties out there They're not just the owner selling the property cheap because the agent has no fucking idea, but they are renting the property too cheap, right? So I'd sit there and I just push up the rents. As a business, I'm literally doubling the value of my books and my business and all that stuff because I'm pushing that cash flow, being very proactive on how it all stacks up. And as an investor in this day and time, you wouldn't have seen a better time for rent increases than today.
For sure.
Yeah, you got interest rates. When you sit there and go, oh, interest rates. Imagine in a year's time, interest rates are back down to zero and the property prices are doubled. Everyone's like, oh, I wish I could buy a property. Oh, poor me, I'm a fucking Gen millennial and got blue hair and I'm grumpy and it's all your fault because you guys had it better than me and I don't eat avocado on toast. The avocado on toast is the biggest scam I've ever seen, right? Because they're just literally trying to stereotypical young people that are saying it's their fault because they're not committed and stuff. It's because they're being robbed from inflation, right? And it's going to happen again. It's literally happening right now in front of all of our faces. And, people have the opportunity. But those rents, that's the money shot.
Yeah.
That's the money shot, Pat.
Yeah. And, interest rates probably for eternity will fluctuate. Yeah. They'll go up and down. They're never going to stay the same forever. So, is there a sense of entitlement or something? Like from the last 2 years of people that they might have 2% interest rates. And they're like, oh, I don't want to invest now because interest rates are triple what they were 3 years ago.
I think that it's like a big bender, right? I don't even drink anymore. I never really drank. And, imagine going on a big bender, right? And you've got to go to work tomorrow, right? You're going to fucking pay for that with a hangover, right? So people are literally there imagine you go and say, okay, I'm going to go out for 2 drinks, right? And then Birch comes over and goes, yeah, 5, that's 10, right? Next one is stumbling home, vomiting, whatever, right? That is the market right now, right? All these people have not thought about the consequences of their actions for the last 2 years, 3 years, 5 years, 10 years, right? They haven't thought about the outcome of their choices that they've made. And it doesn't just stop with property investors. Those of you that are just joining right now, Sky Business News, Victorian government's in talks to secure a bailout in the federal election, $165 billion by 2025 and $115 billion right now. The government's got these debt-fueled bloody orgy booze party on cheap interest rate, right? And no one's looked at that, right? But we've been boring, right? We've been so boring. I've talked about all these things that are boring, they're over repetitive, talked about it over and over again, right? Buy it below market value, have a strong upside for growth, because these things will protect you. I retired in the GFC. I looked at this stuff and that's how I fucking made it, right? People would go, how did Birch made it in that sort of time. So I look at it now and it's just the fundamentals of it. And people upset because their interest rates went up, right? So let's just go back 12 months, right? 12 months ago, interest rates were 3%, 2.5%, whatever. Now it's 6%, whatever you're paying. I don't even know. But the interest rate, has gone up. But that's over a year, right? It hasn't just gone up 3% overnight. It's gone progressively over a year, right? And let's say over the next year, it comes back down, right? When you take out a mortgage, it is 360 months of repayments. 30 years of 360 months. Who gives a fuck? You put the interest rate up and took 12 months out of your 360 months. You've got 350 months of cheaper interest rate. Look at the bigger picture. Look at the fact that your rents have gone up consecutively, right? People need to look at this stuff. They're not looking at it. They don't understand. They're not computing. And I think it is tough a lot of the time as well. People are faced with interest rates going up, and they're faced with inflation going up, the grocery bill going up, the water going up, the food going up, meat going up, nappies going up.
And on the back of that too, there's this kind of myth that because the interest rates are going up, we're just around the corner from snagging some really great deals. Yeah. There are always great deals.
People are thinking that they're going to collapse, right? You go down the aisles of the shop, doesn't matter. Like a nappy, right? You go down the aisle and someone picks up nappies in the shop. And they used to be $28, $32, $40. They're $40, right? You just go through any aisle of the shop. Water, right? Bread, meat, right? Went to the butcher the other day. Spent $200 for barbecue, right?
Come to your place.
Come on, my meat is clean, eh? It's real meat. It's real meat. It's not it's not. We'll do a discussion on food another time. But
yeah, but it's like I often hear this thing that's like, oh, well, now the interest rates, let's see how high they go, because the higher they go, then I'll enter the market, then I'll get a good deal, then I'll jag something.
Well, you won't service because your servicing will be shit. That's why the market doesn't support it, right?
But also the reality is, just like today, we're losing deals. We're losing deals to people that are
the market hasn't
buying.
The market hasn't crashed. The market hasn't crashed. Market's still going up, still very hot. But let's say that interest rates did go up. Let's say that the property price did come off 20%, right? A 200 grand property down to 170k, right? Let's assume that it did, which it's not, because no one can even get a return. The super funds out there, here's the article. For those of you that are just joining on now, super funds, as I pointed out earlier, have made a loss 2 years in a row. It's only ever happened twice, in 1990s, and in 1992, when it first became compulsory, and the GFC in 2007. So we've now got 2 years of negative. People can't get a return, right? You're getting a property. You told me you bought a property for 165k beforehand in Perth that rents for 340. That's a 10% yield, right? One of these Wall Street bank fucking Ponzi schemers off the Wall Street and the side of super fund would get on their knees, tie their hair back, and do anything to get that return. And you can go get it off the shelf, right? So you think that the price is going to fall because the market or the interest rates, whatever, people are going to be in for really sad fucking news when they see in 2 years' time that it doesn't occur like that, right? Yes, there's going to be some areas people are screwed. Yes, there's some areas people are in a lot of trouble. But overall, it's not happening, right? And if interest rates do keep going up, it just means servicing is harder and harder. So you won't have the opportunity to go buy those bargains because you won't service the shit. And when the prices go up, you just sit there with the old fella in your hand going, I wish I could have bought this, I wish I could have done that, and you did nothing.
Yep.
So, I guess it takes us to our next one.
I hope this is inspiring people too.
Yeah, I hope so.
Like sometimes it's a bit of like
banter. But
it's a bit of banter. It's a bit of tough love. It's a bit of like the people I speak to, I want them to like fulfill their complete potential. That's the whole point here, you know?
Someone may not get it today. We might sit here like crazy people or conspiracy theories with the stats that are out there or negativity. I'm more optimistic today than I've ever been. The last time I've been this excited was in 2020 when Corona came, right? That was when I was so excited. And now it's probably the second time that I've been as excited because the opportunity's there. Interest rates are going to drop. Inflation is runaway. They've admitted defeat. The day that you see the first rate cut, which is only months away, right? They put their little flag on and go, we're fucked, right? And we're seeing it with the collapse of governments. We're seeing it with the collapse of currencies. We're seeing it with the collapse of the system out there. They're going to go back to print. We're going to see the biggest inflation we've ever seen. You think you've got a problem with inflation now? Wait until the next 2 years, 3 years, 4 years comes through. That is what you're going to see what a problem with inflation is. Yeah, assets are going to go up. You don't want cash. You want things that are going to go up with inflation. I had another thought of things, which was, is it going to be reasons or is it going to be results? You know, like what are the reasons for you to be doing something, or is it going to why you can't do something, or is it going to be the results? People can sit here and have all the excuses under their mind, under the sun, and then they're just excuses, they're reasons why they shouldn't, couldn't, don't, whatever. And I think sometimes it's just to justify their excuse, right? They love to pull. They're so fearful, don't want to do shit. They go, oh, Ukraine's getting invaded, right? And then they don't do anything. And it's like, well, fuck, like, I know I need to do it, and that's what I need to do to get there. And I've mathematically calculated. I've got a strong strategy, got a strong plan in place. That's what I need to do in order to get there. So I think what people get motivated by is when we talk about deals sometimes, right? And I'm just pulling this completely out of my ass right now. Let's think about maybe just for people for inspiration of what they could be doing today in the market. Let's just think maybe like 5 deals we've done in the last week, not geographically where they are, but just some numbers, right? So,
okay, we could start with the good one. 152 in, let's say, mid to north Queensland. Not giving too much away. So 152 was that was refied about a week or two later for 250.
I Okay, yeah.
Yeah.
That was in like a couple of weeks. I know which one I'm talking about.
Yeah.
Rent for like 300 a week.
300. Nice, like renovated, better brick type of block. Nothing fancy, but it was good.
You can't build a property for 150k. And this is in like a very, very large location.
Yeah.
Like, without giving too many stats away, like it's bigger than capital cities.
Yep.
On this continent.
Yeah. So that was 150, refi for 250. Awesome. What else?
No, I mean like deals that if someone goes, hey, I want to call Pat tomorrow.
Yeah.
I want to buy a property. We don't do that. You call us up. We're not just going to say, hey, you buy a property. It's not how it works. They call you. You work out what they want to do. Work out the goals. It might take a couple of weeks. Get yourself financed. Check out all that stuff, and then we can start looking at properties that I find.
Yeah.
But if someone's a client of ours or an investor, what sort of numbers? Like we've got some land for 12 grand.
Okay. What deals we got? On
On foot at the moment.
Oh yeah, cool.
So land at 12 grand.
Yep.
We've got Sydney properties starting from $260,000.
Got that duplex you mentioned for 285.
A duplex pair that just came in literally before we hopped online for 285, rent for 500 a week. But the deals on out there. You couldn't build a duplex with that. Really. It's 140k a key.
Yeah.
We got that unit for 136 grand, which is off market, rent for $300 a week, which is, in a capital city, like in the metro sort of region.
What about that house you showed me today? There's a house, it's a reno job. And this is maybe another good question. Like, would you buy a property that needs renovation?
Yeah,
and
so
you need to
there's two
slap
of
up
them.
the
There's
walls.
two of them. Let's call them 100 grand roughly, right? Spend maybe 50 if you're a builder, maybe 80 if you're, maybe 100 if you really, don't know what the fuck you're doing. Rent 400 to 800 a week.
Yeah.
Those things, and value.
That's a big range though. So let's put it into context. In the same suburb, it's what we were discussing before.
Yeah.
The 2-bedroom units rented for $600 a week. This is
correct.
A 3-bedroom house.
3-bedroom house, right? So it could be,
so 600-700.
I'm just being real conservative.
Yeah.
Like our investors write and say, I'm really happy because I've got an extra $100 on what you quoted me. Well, that's what I want to see, right? So 100 grand renting for $400 a week, renting for $800.
So you're in that property for, let's say, 200.
200 is worth 400, and you rent for 4 to 800, 600, 700, 800. There's all the 600 for the fun of it, right? We've got properties in Sydney that are in like blue chip locations, like really good locations, for 380 to 400 grand. Which used to sell 5 to 7 years ago in Sydney for 500,000, right? 20% off the top, right? Rent for not the greatest return, but like $450 a week, or whatever. But you could be confident in getting equity out of that pretty quickly.
Yeah.
What else?
Which is something that you might have a little cheapy for 180 or 160 or 200 to complement your cash flow to keep it buoyant.
We've got 3 today and I'm going to have a whole, like tonight I'm going to go for a big walk and go to the gym because I need to. Haven't been for a week because I was at the holiday house. I left my gym card at home. But I got 3 properties today which were in a major capital city for 180 to 215, renting for 350 to 400 a week in capital cities. So they're out there, and these things have got massive fundamentals. It's like buying the Gold Coast in 2018, these properties. So, yeah. Cool. And if someone wants to contact Pat and have a discovery session, there's a link in the video.
Yeah. So you can click on the link, you can book in the calendar, we can have a chat.
It's literally just straight to your calendar. So you can have a chat with Pat.
Pretty much. You could email admin@B.Invested.com.au.
You don't know the phone number, do you?
No, I don't know.
1300-367-925. I've said it so many times. Contact the office, speak to Pat, speak to any of the team. And probably the easiest way is booking a conversation with Pat in the diary, in the link in the description, and people can have a talk, and you guys work out what is best in your diary, and then look at Pat's diary, and then Pat will make sure he's on the call to you and see what you can go. It all starts with the discussion. There's so many of your investors that have got 5 properties, 10 properties, 15 properties. It might not have been today that they have a discussion. You had a discussion 10 years ago with my office back then, and then here you are now, 10 years later, and you're like, fuck, it's the right time now. Like, yes, we can cry over spilled milk, but it's like, now's the right time. We can do that thing. And,
6 months ago, maybe not 6 months, let's say at the start of the year, I spoke to a young fella. He was 17 and he's about to be 18. And so actually, we've got 2 guys like this, which is awesome. But he's about to turn 18 and he's just raring to go. Like when his 18th birthday hits, boom, he's in. We've got another guy, he might be watching tonight, but if he is, hang on. He's already in chats with Zinger. He turned 18 last week. And so, he's just got to get his ducks in a row. And, but he's 18 and he's planning, he's planning for like, hey, how can I improve my future? Which is awesome foresight. It's really good.
Yeah. And I think if you're young, if you're watching, you got kids, get them started early. You know the pain of doing it when it's later. It is, when you're young and you're at home, you're 18 years old. Yes, you don't have the income. Yes, you don't have the deposit, right? You've got to work hard and save up the deposit. But you've got 40 years ahead of you, right? But by the time you hit 30, 40, whenever you have kids, you get a spouse, you've got more commitments, it becomes more difficult. But it doesn't mean that you can't do it then, right? But if you're young and you're like 18, you've got options. People go, I'll just YOLO it until I'm, 30 and find my feet after I've done Kentucky and travelled and, gone clubbing and whatever. But that time that you can spend at that earliest part of your life, throughout all the years, people have different things that are for and against it, right?
That's right.
People that are older can say, I can't do it because I'm too old. And people that are young, I can't do it because I'm too young. Everyone can have a story as to, it's like that alcoholic. It's like you got two kids, right? And one of them's an alcoholic and one of them's not, right? You're going to ask them, why are you an alcoholic? And so, my dad was an alcoholic, right? You ask the other kid, why don't you touch alcohol? It's like, because my dad's an alcoholic, right? And because they've had the same sort of, you can make it two or three.
You can make an excuse or you can turn it into motivation to keep
do
going.
Stuff, yeah. That's really cool. I was telling you before, and I was talking to a real estate agent, and I caught up with him the other day, and he bought his offsider to lunch, and then he said to me, he edited something, like he said something about, Birch is going to shave his head when he gets under 100 kilos, and I was like, how do you know that? Because I was like, I only ever talked about it on Facebook Lives. He's like, what's your Facebook Live? I was like, that's cool. And he's like, I've been watching you since I was in like year 8 at school or something. And I'm like motivated and all that stuff, which is really, really cool. So, it's never too early to get started. Cool. And I can see here, Felice has put a little message here. Nathan and Pat, you are catching up with friends of mine tomorrow. Look after them the way you've looked after us.
Yes, I am.
Thanks, Felice. We're going to catch up shortly. But, that's what we do. So, on that note, I can see the time. I've got a jet and go to the gym, and I'm trying to get to a point where I shave my hair this week, right? So it's, let's see.
I'm scared to see.
It'll be alright. There's some old videos, from when I was younger. I had shaved.
You have all sorts of haircuts through the years.
Yeah. So the rat's tail will go. People ask, is the ratty still there? Rat's tail will go.
Sell it on eBay.
Nah, still not great. I'll keep it though. Get it done, plait it nice, and maybe super glue the end of it and keep it as a keychain or something. Give it away as a contest, right? I don't know. But yeah, I'm going to go and do that. But I just want to thank everyone for their time this evening, for tuning in and having us a part of your viewing. Thanks, Pat, for coming and
Pleasure to
be in the office to do the Facebook Live. We'll catch up soon. Keep being awesome, everyone. Be cautious of the news that you're reading, what you're consuming, putting in your head, and making sure that you're looking at facts, figures, have a good solid plan, have a good solid strategy, and take the right steps in order for you to be able to reach your goals. We'll catch up shortly. Next Tuesday when we're on live, like maybe not next Tuesday, but the Tuesday after. And as people asked beforehand about how to find the podcast, the No BS with Birchie podcast, it's out there on all the platforms. We'll catch up shortly. Have a great evening. Bye for now. Keep being awesome.
Cheers.